This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all.
Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today I want to start things off by touching on the whole idea of a Blackrock hard fork for Bitcoin. I mentioned this yesterday and I was just kind of spitballing for fun, right? We were calling it Crack Pipe Mondays and we were just throwing some ideas out there. And I did say it was highly speculative. But one thing that blew my mind about yesterday was the comments. I could see an awful lot of confusion in the comments. People were saying things as if they were facts and they were not founded in reality at all. So I'm going to just spend a little bit of time touching on that. Then what I want to do is show you a few Bitcoin charts that are all kind of pointing higher. And we're still having to deal with this discrepancy of whether or not we're going to get an earlier than expected top or a normal and to be expected heavily right translated late 2025 top for Bitcoin. And then to wrap things up, we're going to look through a few charts because there are, again, some mixed messages, especially in the likes of the stock market. Yesterday, I was talking about the possibility that BlackRock could fork the chain. As I said in yesterday's video, it could easily just be a legal covering all bases type thing where they put some information in a document just to protect them in case the worst should happen and they actually have no intention of doing it. I'm not going to go over everything yesterday. If you're interested or you missed it, you can go back and check that out. But when I was reading through the comments, I was really quite stunned. I was seeing things like BlackRock can't fork Bitcoin. And I was also seeing things like you need 51% of the hash rate to fork Bitcoin and BlackRock cannot steal the Bitcoin. Okay, now all of these were very, very common in the comments and they're all completely wrong. First of all, the idea that BlackRock can't fork Bitcoin is insane. I can fork Bitcoin. You can fork Bitcoin. Anyone can fork Bitcoin. You certainly do not need 51% of the hash rate to fork a chain, okay? That's absolute nonsense. I think what people are getting confused about here is the 51% attack, which by the way is no longer even possible, but we'll save that conversation for another day. But the analogy here to use for a fork is two different games, chess and checkers. If Bitcoin is chess and undergoes the rules of chess, then any kind of fork can be analogous to checkers, okay? A totally different game with a totally different rule set. It's also nothing to do with miners in terms of the fork. Bitcoin has somewhere between 21,000 and 60k nodes. So you can see that here the reachable Bitcoin nodes currently sits just under 21k and the global Bitcoin node sits just over 60,000. So even if BlackRock was to buy and run 2 million nodes, which needless to say would be significantly more than the numbers that are currently running for Bitcoin, BlackRock could fork the chain, they could use their 2 million nodes to verify the transactions in their game of checkers, and the Bitcoin nodes, even though there's significantly less of them, would still continue to do Bitcoin things. They would continue to play chess under their own rule set and verify their own main chain. So it doesn't even matter if somebody goes out there and buys a bunch of nodes. You certainly don't need 2 million, okay? You certainly don't need 51% of the hash rate. Any man or his dog can go and buy a few nodes and then fork the chain. And we've seen this multiple times before, okay? We've seen this with Bitcoin Cash, Bitcoin Gold, Bitcoin Core, Bitcoin SV, Litecoin. We've seen this over and over and over again. And if you're wondering how it works out, all you need to do is take the forked asset and price it in Bitcoin. This is Bitcoin Cash, just as an example, divided by Bitcoin, and you can see it's down almost 98% top to bottom. So remember, Bitcoin is a voting system where people use their capital to vote. That is what this is. That is the population of Earth voting with their capital to choose Bitcoin. It's exactly the same deal for any of these forks, okay? You grab the top of Bitcoin SV this time, priced in Bitcoin, and it's down 98%. That is because 98% of the market would rather hold Bitcoin than Bitcoin SV, okay? It doesn't matter what everyone's opinion is, the market in aggregate has used its capital as a voting system and has voted for Bitcoin. And so the idea that BlackRock couldn't fork the chain, okay, like I said, anyone can fork the chain. You certainly don't need any hash rate at all, because if we were to move to a proof of stake system, which would be more like fiat, right? And we also saw this from Ethereum, remember, a couple of years back, then there's no true miners. It wouldn't be a proof of work network, it would be a proof of stake network. And thus we would run validator nodes instead of proof of work ASIC miners. Of course, if we fork the chain to a proof of work system, then yes, you do need some hash rate, but you don't have to convince the existing miners to switch, okay? They get to choose which network they want to support. And if you think that most of these Bitcoin miners are going to say, oh, you know what, I'll just switch my hash rate over to BlackRock's fork, which probably won't have a 21 million supply hard cap, which will probably have a lot more control, a lot more tyranny, right? A lot less freedom. These miners aren't going to do that. Okay, that's my speculation, at least not the majority of them. And the reason I wrote attacked here is because I even think the funny thing about this would be BlackRock would have to fork the chain to proof of stake, just like Ethereum, because that gives them more control. If they forked it to another proof of work chain, one, that doesn't make any sense because we've already got proof of work chain, but two, the Bitcoin network is so powerful now. It would not surprise me at all. And the only reason I say this is because this is what I would do. If I was a big miner and I had a big chunk of the hash rate, I would use some of my hash rate to attack their proof of work chain. It would not at all surprise me if they tried to do a fork to a new proof of work system and they started to mess around with the code and take away the hard cap and all of this kind of thing. I would not at all be surprised if the rest of the Bitcoin miners decided to attack that chain, just as a way of sending a message. So once more from the top, okay, BlackRock can't fork it. Yes, they can. Even you or I can fork the chain. Anyone can do it. And it doesn't matter because Bitcoin would still be chess and our new fork chains would be checkers. You absolutely do not need 51% of the hash rate to fork the chain. And as I said earlier, in the case of proof of stake, you don't need any hash rate since they run validator nodes rather than miners. And so the too long didn't read here is BlackRock can go fork itself. Okay, cold storage will always win. Those of us that cold store our Bitcoin are completely immune from this. Of course, some kind of fork could easily see a shakeout, could see some chopping games and volatility, a FUD campaign, okay? But ultimately, nothing changes to Bitcoin when we fork it. Not to mention, if you're holding 10 Bitcoin and BlackRock were, or anyone were, to fork the chain, then all you would need to do is sign a transaction to prove you hold the private keys to your 10 Bitcoin, and you would get issued 10 of the new forked system, which essentially would give you the opportunity to sell a dividend, just like we saw with Bitcoin Cash, Bitcoin SV, all of the other ones. But the absolute truth of the matter is ETF holders might actually be at increased risk, and this is where I want to deal with this final thing, which is BlackRock cannot steal the Bitcoin. Now, let's be really, really clear here. I am not suggesting they will steal it, nor am I suggesting it is likely that they even consider stealing it. But what I am saying is, to say BlackRock cannot steal the Bitcoin out of the ETF is totally false. Let me show you exactly why. Any ETF, or ETN, or ETC, or ETP, anything like that comes with a KIDS document. Okay, sometimes this is key investor document and sometimes it's key investor information document. But anytime you buy an ETF, an ETN, an ETP, an ETC, it will have a KIDS document. Okay, this is mandated by law. And a key information document or a key investor information document is designed to be a couple of pages, maybe 3, where it gives an outline of the cost of running this thing, what you can expect from it, the risks involved. Okay, and again, this is a regulated product, so therefore part of that regulation is there must be one of these documents so that investors can, at a glance, truly understand and easily understand what it is they are investing in. Now, if you've ever bought an ETF or an ETN, an ETC, whatever, okay, you should know about this. And if you don't, then I would suggest to you, you don't do sufficient due diligence. But the point I'm trying to make here, again, going back to they can't steal the Bitcoin. Well, actually, the moment you invest in any of these type of ETFs or ETC products, if you were to actually know where to look, you were to get hold of the KIDS document and scroll down, there is a section in all of them. What happens if the issuer is unable to pay out? In the case of failure by the issuer to pay any redemption amount when due, the trustee can enforce the security of gold deposited with the custodian. Once the trustee has enforced the security, it can then sell the gold and use the proceeds of this sale to pay the amounts owed to you under the ETC securities. The proceeds of such sale may not be enough to cover all amounts owed to you under the ETC securities, and there is no other recourse available to you. The product is a debt instrument and as such is not covered by any deposit protection scheme. In layman's terms, they will pay you only until the point where something goes bang, and then they will pay themselves first and you probably get nothing. This is no different to your bank account, right? The money in your bank account is yours only until the point where the bank says, sorry, sir, we haven't got your money anymore, okay? And then you're totally on your own. Now, at least with bank accounts in the UK, I think something like £75,000 or £85,000 is covered under an insurance policy, so you may be able to claim that back. And I believe in the USA, it's $250,000. But unlike banks, when you invest in any kind of these ETF products, you accept this liability. If you don't read this and you don't understand this and you don't know this, well, that's on you for not doing sufficient due diligence. Now, this is just an Amundi one, okay? But what about something like Invesco? Surely these bigger ones don't forego all fiscal responsibility, right? Well, again, wrong. All we have to do is scroll down. What happens if Invesco can't pay out? Okay, you may face financial loss should the manufacturer or the custodian default on their obligations. There is no compensation or guarantee scheme in place which may offset any or all of this loss. And one final time, iShares by BlackRock, okay? Again, this is just for a gold ETC, and you scroll down, and once more, because it's a mandated and standardized document, what happens if iShares Physical Metals is unable to pay out? Okay, compensation will not be available under the UK Financial Services Compensation Scheme or any other scheme in the event of insolvency of the company, custodian, sub-custodians, arranger, and or the trustee. So as you can see, the idea that BlackRock or any asset manager cannot, quote, steal your assets is false. Again, it doesn't mean they're going to. It doesn't mean I think they're going to. It doesn't mean it's likely. But anytime you hold one of these type of ETF products, such as the Blackrock ETF or any other ETF, you, whether you realize it or not, have accepted the risk that in the worst case scenario, if they are to go bankrupt for whatever reason, and keep in mind, they can go bankrupt through their own deliberate chicanery. Okay, and even if they do, you are not getting paid out. This is a risk you accept whether you realize it or not. So again, if we go back to hyper speculation here, super spitballing, we could, in theory, see a scenario where they fork the chain and they go, oh, sorry, our ETFs all blew up. And then everyone goes, okay, well, give me my money back. And they go, no, sir. We've already made it very clear in the document that you decided not to read that if we blow up through our own incompetence and chicanery, we keep your Bitcoin. So to be really clear, okay, this is not me fudding the price. I know people always say that. Why are you fudding, bro? It's not FUD, okay? And again, I'm not saying it's likely. I'm just simply saying these types of comments show that people should really be studying more and commenting less. Now, with that said, let's move on to today's episode, okay? The long-term price chart of BTC USD, cup with handle price target, conservative measured move target, stands at 137k. What I thought was fascinating about this chart is 137k seems like it's barely a hair's width away on this chart. This seems absolutely achievable. And thus I wonder if numbers much higher than that are too. Kushi here points out that this one may well go higher than most think, and it may well happen faster than anyone thinks too, with this big parabolic uptrend. And remember, we are still looking for an extended final fifth blow off top wave. So if this thesis has any merit to it, if this is actually what's in play, then the only thing we should be expecting here is some very violent upside push. Any kind of sideways action, any kind of pump and breakdown, and this clearly is not what's going on. So the good news here is, if this is in play, this is what should be coming next. And of course, if it isn't what we experience and observe in the markets, then we know we've got to readjust and something else is going on. If you watched yesterday's episode, you may also realize that we were talking about this PPO indicator. I showed this chart here yesterday from Tony the Bull, which showed when we move above the extreme, which is this red horizontal line, okay, synonymous with tops coming in for the price of Bitcoin, Tony was pointing out that this thing might be turning red pretty soon. And as it turns out, just hours later, after I posted that video, it has already moved into the red. Now, this doesn't necessarily have to be a sell signal, okay? It just means that we are getting to the point where extreme moves should be observed. And here's the key part. Once a couple more of these bars form, okay, and particularly if they start to cross above the upper red bound, it means any breakdowns are to be respected. And of course, all of this indicates that we may have to entertain an earlier than expected top. Now, on the flip side, to make things even more complicated, Crypto.com points out if you pull fibs from the halving dates, the 236 usually sees a major top come in, and then at the 382 fib, we see the real top, the ultimate true cycle top come in. We see the same thing, okay, we get the halving date, the 236 fib time pulled from that halving date, sees a major top come in, only for the rally to continue to resolve to the 0.382 fib time from that halving date, where we see the actual top come in. We saw the same thing in 2021. And if this thing is going to repeat, then it tells us to expect a major top sometime in March of 2025. Now, from a weekly cycle perspective, I think we should expect this top to come sometime late February with a sharp and sudden decline into a March weekly cycle low. And then the real challenge is presented, because this is going to look an awful lot like an early top, right? Like a Q1 top is in play, and thus the only thing to expect that's reasonable is an extended bear market decline. But the reason I've been so vocal about saying I don't want an early top this whole time is if something like this is to play, we might have to weather some kind of big 50% drawdown and then play a low probability breakout here, not knowing whether it's got another high left in it into that super right translated October timeframe, or whether that low probability breakout will resolve to a lower high that then continues to roll over into a 4-year cycle low. I'm not saying we go this low, of course. So it's going to be a very difficult year to navigate. For now, though, I think in the near term, it's pretty simple. We're aiming higher, no matter which view you're taking, and then it should be time to take some profit and reassess after we get some kind of decent shakeout and correction. And a couple of other things I wanted to point at here is this historical gold bull market is still incredibly unloved. It's really surprising to me that the gold chart looks like this. Huge breakout, huge decade and a half consolidation, followed by a huge breakout, another almost decade and a half. I think this was 12 or 13 years. And now at the hard right edge, we've got a huge breakout, okay? This is going to be an unprecedented move. I expect it to be well into the 5 figures, as I've said many times. And every time I look around, I only see people that don't care about gold. Or on the flip side of that, I see people that like gold and that hold gold, but they just have no possible way of conceiving a 5-figure gold ounce. Many of the biggest gold bulls I know are targeting like, oh, if it goes to 3.5K, I'll be well happy, right? Oh, you really think it could go 4K? 4K sounds insane. So I don't think anyone is bullish enough here, and I for one am super excited about this. And saying that, it's been a while since we've looked at this Bitcoin to gold chart, but you can see it's still more or less, if Bitcoin can start to really outperform here, moving as expected. And I've long been making the case that some kind of big squeeze up in this yellow fractal, exit the gold, hold the cash for a while whilst everything comes tumbling down, and then you should be able to buy back over 100 ounces of gold per Bitcoin, which just seems insane to me. That seems like such a fantastic opportunity, particularly then with a longer term horizon where we can be targeting something as insane as this. So I continue to remain very, very, very bullish on gold and the precious metal markets in general. And the thing I like the most about this, as I said, is this is really unloved and unnoticed and under the radar. No one seems to care. One final thing I wanted to point out before we move into the charts is, this is from Max, SPX priced in M1 plus M2. So the base money supply, deposits, all of that. Notice where the S&P has gotten to and has so far been rejected. So a breakout could absolutely be on the table here. We don't know. Okay, something like this would be the blow off top gang, the roaring 20s, this early stages of a bull market. All of that would be correct if we get a breakout here. But if we are going to reject, now would be the perfect time to do it. Now would be the perfect time to see some failed cycles. And now would be the perfect time to get a rejection here at resistance, roll over, grind this second angle, and then break down, right? Now would be the perfect time if something like a breakout is not on the table. So it's going to be super, super interesting to see what comes over the following days. So far, we've got mixed messages from the stock market. We know that we've got a cycle low behind us now. We've got a bullish setup. We've got the thesis to be long. But objectively speaking, we've rejected at resistance quite nastily yesterday. So one of two things is going to happen here, right? The bull case is that we just backfill that gap and then we break out and then let's go. Okay, that's why we're long. And the other thing that I fear is coming is some kind of rollover here, a failed daily cycle, meaning we take out that cycle low, and then we get a grind and a breakdown, and we're targeting much, much, much lower down. There will be severe technical damage on the charts by then. And if we go back here, we would have had true third angle breakdowns followed by second angle breakdowns, and that is where my system tells me the tops are in. So pretty wild times, right? It's not a call by any means. And of course, what I want to see here is a huge rip-roaring rally. So if we can get a breakout, you'll actually see me increase my exposure. But don't get it twisted, there is still plenty of risk out there. NASDAQ as well, got a breakout yesterday and confirmed it, but this is an indecision doji. It probably wants to have a retest and a gap fill before it can move higher. Same for the Dow Jones. Technically, trying its hardest to break out. Maybe if I draw this line a little bit more accurately, we can get a better idea of what's actually going on. So just about breakout, retest, possible resumption. There is definitely a thesis for a long in here. Not sure if it's for me at this stage. And similarly, the thing you want to watch for here is any kind of failed cycle that also takes out that second angle, at which case I have to declare that was the top. Breadth is still continuing to gradually widen here, so I like to see that. And the precious metal markets seem to be getting dangerously close to confirming some cycle lows. I'm not 100% sure if this thing is going to reject one final time, force a lower low weekly cycle low. That will resolve the ugly look on the weekly time frame and then get a breakout. So I'm still playing quite patient before I get to full exposure here and add all those mining stocks in the longer term accounts in the members section. But we are exposed to this current move via silver at this moment in time, so we love to see that, and it looks like it's setting up for an ad on a breakout of the downward sloping red. The Dixie is on its way to a daily cycle low, but notice again 1, 2, 3 right trans daily cycles. So on a balanced probabilities, the next 1 or 2 is expected to left translate. And then of course, if you're a dollar bear, you're going to need to see that weekly cycle low left translate and fail. Otherwise, we're still watching the canary in the coal mine here, which is the Dixie, slowly but surely fall off of its poor perch. And for Bitcoin, Bitcoin is still doing Bitcoin things, right? It's left behind a daily cycle low. This is well and truly confirmed. We're rocking with 2 positions. We've set our third and final blow off top angle. And as I was saying earlier on, if we are right in any way, shape or form here, then we should be expecting fireworks. This thing should really start to turn up. This thing should really start to move rapidly to the upside. And if it doesn't, then we know we're on our way to a weekly cycle low, and much, much, much lower numbers need to be put on the table. But for now, I see no reason to be concerned. We're early in a cycle, the daily cycle that is. We are confirmed with a daily cycle low, so we've got a hard invalidation, and we've set a third and final blow off top angle, which when we zoom out, doesn't look too bad. So I'm your boy Camel, wishing you all a fantastic rest of the week. If you're a level 3 member, look out for some updates as and when I have something important to say. And other than that, have a great week. All the best. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game. He's a badass. deep. Camel Finance got the markets key, taking us normies on a bump.